Alright folks, I got some good news and I got some bad news. The good news is silver prices are headed higher, but the bad news is unfortunately so are the premiums. Welcome back my friends, thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. I always talk about during our stacking strategy, we need to learn how to adjust and adapt. Because how you invested back in the day is going to be different than today, and it will continue to change in the future. You don't have just the same old cut and dry strategy because markets change, your preferences change, maybe your financial situation changes, maybe the direction prices go or the type of silver you've been accumulating. Maybe you need to switch it up and focus more on the basics, get back to the basics on why you started stacking in the first place. It's very easy to get distracted, a lot of different variables. And premiums are one very good type of example of having to adjust and adapt. I want to ask you a question. If you've been stacking longer than the year 2020, has your strategy changed? Remember, this is a silver stacking strategy. We're strategizing, right? Gamblers throw money at the wall, hope it sticks with the odds highly against them. Investors tweak the odds in our favor. We make strategical decisions based off information. We use the information, tweak the odds in our favor. It's called a silver stacking strategy. That's a big difference between gamblers. I don't gamble. Hate gambling. Never scratch offs, all that. No. I understand the value of a dollar. I understand the value of silver. So buying a $20 scratch off makes no sense when I can buy almost an ounce of silver with that. Regardless, though, let's get back to the point. What you used to be able to buy with even spot price, right? If spot price was when I was the majority of my time stacking, spot price has been $16, right? Because the average price of silver for the last decade has been $15. Recently, it's been up, so I'll say $16, $17 is the majority of the price that I've been paying. Well, I'm not used to paying anything above $3 to $4. Unless I have to pay for shipping, but I always paid over $99, which ironically, until 2020, free shipping was orders over $99. Then 2020 and on, now it's free shipping over on orders over $199. But regardless though, paying a $3 to $4 premium, even for coins, we're not just talking about generic rounds, we're talking about coins. I used to recommend Eagles to beginners. That was the main coin because it's a government-backed bullion coin. It's legal tender. You can spend it. It's legal tender. It's the most recognizable coin in the world. You can take an American Eagle anywhere in the world. They'll know that coin is valuable. It represents value. They might not understand the 1 ounce inside of it's valuable, but everyone recognizes that coin. You can't do that with any other coin in the world. Not a maple, not a panda, nothing. But Eagles were the prime coin for beginners because it's a coin. It's not a round. Nowadays, that is the worst coin I would recommend to beginners. Right? When I started, it was always semi-numismatic coins where the design changes yearly, like pandas, kookaburras, koalas. The design changes yearly, plus there's way lower mintage numbers, so that's why it's called a semi-numismatic coin, aka high premium silver. High premium silver and a semi-numismatic coin, those were the same words because pandas, kookaburras, koalas, those coins, the design changed yearly, so it's more collectible, driving a higher premium, high premium silver. Nowadays, you have coins like Eagles that have high premiums, even though the design stays the same every single year, and they're minted in the tens of millions, where kookaburras, 300 to 500,000. That's why the premium was high on the kookaburra. The design changes yearly. People want every single year to have the collection. Same with pandas, around 8 million per year. You have Eagles that are minted 20, 30, 40 million per year. Only recently it's been around 15, 20 million. Regardless though, now you're seeing basic bullion coins having higher premiums than all the coins that are considered high premium semi-numismatic coins. So what I used to recommend to beginners has changed a lot. Now let's dive into this article. I just wanted to give a little bit of insight into this, because I was someone that loved high premium silver, right? I'm going backwards. I started off all my years stacking buying the pandas and the kookaburras because I fell in love with nicer stuff. The design of the pandas, I like the MS-70, like the PF-70 Ultra Cameo Moon Festival Panda 2016 version. I have the MS-70 Dragon and Phoenix, even with the dye variety, or some say it's an error. I was one of the first people to get those in 2017 when they came out, because I bought mine from Modern Coin Mart, which is on the tip of Florida, and they came over from Australia. So Modern Coin Mart got the first shipment in of the errors of the Dragon and Phoenix, and I just happened to come across some. I'm rambling a little bit, but the whole point is how we bought back in the day. Even if you watch my stacking videos from a couple of years ago, pre-2020, you could see it's much different. So now we're in this new game where everything's changing. Look at local coin shops. Local coin shops, they were always a little bit detached from online dealers. But now, what are local coin shops going to do? They have to keep their lights on, but if I go to a local coin shop and ask how much I can buy an eagle from him, he's always said $3-4 over spot. But he's getting ripped off now if I did that. Or I could rip myself off by selling to him, and he's only going to pay me $3-4 over spot. So anyways, let's look at this. Where are precious metals prices and premiums headed? So first question, where are silver premiums headed? At the moment, premiums appear to be headed lower, particularly for silver. The wholesale market's more stable than it's been for much of the past 3 years. See, I can disagree with this because it's not directly correlated with just the investment sector. Look at the LBMA vaults, COMEX, LME. Look at the amount of silver that's needed globally. Look at how much silver is going to be needed in the next 5 to 10 years. I can't imagine premiums are going to go downwards. The U.S. mint's in an entirely different situation than these other mints, but even these other mints are talking about having an extremely hard time finding silver. I don't think premiums are going to be going down anytime soon. I could only see them going upwards, especially since silver demand is so high, which I just made a video talking about demand's even going to be rising even higher next year. It makes no sense for dealers to lower the premiums, especially since they're having an even harder time finding silver than ever. You're probably getting emails from, if you're signed up to newsletters with these sites like AppMex and JM Bullion and Modern, they're sending out newsletters, emails to their own customers, begging them to sell their silver back to them. They're doing it backwards. These sites are asking you to sell to them, and they're paying record high premiums for that. That speaks for itself, that they don't have silver and they're willing to buy it from you at a very high price. So do you think that they're going to lower premiums if they're doing that currently? So the lesson of the past few years is that bullion premiums are quite sensitive to physical supply and demand. And yes, there you go. There's a supply deficit and the demand's going to be booming. There's a silver shortage. It's not a myth anymore. It's not a conspiracy. I've made hundreds of videos covering data, and that speaks for itself. Low supply, high demand shoots the price up. Maybe not spot price, because spot price is manipulated, but the price that you have to pay, which is the premium attached, is what is going up. The vaults backing the trading exchanges reported a continuous decline in inventory. The alarm bells have started to ring. So he just contradicted himself. He says that premiums are going back down, but then he just said that vaults are reporting continuous declines in inventory. He just said premiums are quite sensitive to supply and demand. And he just says supply is draining. So although premiums have come down, bullion buyers may simply be taking a breather. Geopolitical turmoil and falling investor confidence in financial assets remain as major drivers. The next wave of people seeking the safety of physical metal may not be more than one headline away. And I could agree with that. I definitely could agree with that. I was actually one of the recent special guests on the Rich Dad radio show. Rich Dad, if you've ever read the book or heard about the book Rich Dad Poor Dad, the famous author Robert Kiyosaki, he has a podcast. It has like over 3 million subscribers on YouTube. I was a special guest on his podcast. He's a silver advocate. And I came on there and I talked about what I talk about on my channel. I took a little bit of a different narrative, right? A lot of times he's talking about the micro, the financial stuff, right? The dollar's crap and you shouldn't invest into something. I came in there and talked about what I talk about, the macro, the silver shortage. I'm talking about supply disruptions. I'm talking about the green era, all the silver we're going to need for EVs and yada yada. And safe to say that people were taken way off guard, and I've probably gotten over 1,000 emails from people asking me, so I was so intrigued, where do I buy this silver from? And a lot of people thought I meant the SLV. See, they're so programmed that everything's digitally that when they heard me say silver, they automatically assumed I meant on a screen, digitally. They didn't even realize I'm talking about the physical metal. That's how programmed people. I mean, it makes sense if you're investing in stocks and all that stuff, then you would assume that. But no, we're talking about the physical metal. If you can't hold it, you don't own it. And I don't see it, like we said, like my last video, 2023 and beyond. I think 2023 is the breakout year for silver. I truly believe that. I mean, every sign is pointing towards that. So, regardless, I don't think premiums are going down. I don't see how that's possible, especially as silver is, $24.20 right now. Where do you expect gold and silver prices to go in the months ahead? The truth, of course, is we don't know. If futures markets work properly as a vehicle for honest price discovery and responded as expected to fundamentals like supply and demand, forecasts might be more viable. And yes, this is exactly what I'm talking about. This is what I always talk about. There's an S word that if you've watched my channel for the last 3-4 years, there's an S word that I hate. That S word is speculation. The price should be off the fundamentals, supply and demand. Why something that is physical, tangible, has intrinsic value within itself. No matter who says that 1 ounce coin is worth what is irrelevant, because the coin's value is the 1 ounce inside of it, not the price tag. Why is it based off speculation? Bitcoin can be, because Bitcoin purely is speculative. You could even go as far as say some stocks, but precious metals, something that's physical, should be based off of supply and demand. When you add influences like market manipulation, algorithmic trading, leverages price direction, it gets much harder to predict. And that's a very good point. It's a very good point, but I do believe in, like Ted Butler made an amazing article talking about price manipulation cannot exist forever when the fundamentals will outweigh manipulation or spoofing. So now they're going into Fed rate hikes, hinder precious metals markets. I think this could actually work both ways. When I made my latest video last night, or depending when this video comes out, my most recent video, we talked about this. We went actually pretty deep into this. I highly recommend you go watch that video because we dove into 2023, what silver prices are going to do this year, and it's looking very, very bullish from not just myself saying this, but I covered, I think, 3 different articles. So metals are particularly well suited for the times in which we live. Price inflation is anything but transitory, as Federal Chairman Jerome Powell had laughably claimed. This year, Powell finally acknowledged price inflation as a serious issue, and the Fed responded by driving interest rates higher. That bolstered the Federal Reserve note dollar versus other major currencies. America's current monetary policy tries to fight the inflation it creates by triggering a recession or higher unemployment. It has been ugly for real estate stocks and bonds in 2022. Another funny example of speculation is the Fed. Look at a Fed meeting. Look at before Federal Chairman Jerome Powell comes out and says yada yada, about interest rate hikes. The markets go wild. They go wild. People are investing purely off speculation, what they're assuming he's going to come out and say. 50 basis points. But It's all an assumption. And they don't even know. They're speculating themselves. They'll say, we expect by 2023 to do X, Y, and Z. Or this is our goal or our plan. Those numbers aren't always what happens. So there's speculation before the announcement and speculation after, and people are investing off of all these guesses and all these theories and assumptions. So you can see how the market could be way off. It's a completely different realm of price price discovery than what is really happening. And then the numbers actually happen, and then the markets kind of adjust back. But regardless, the fundamentals, supply and demand, will overcome all of this. Just like I say, silver will take on a life of its own soon. Regardless of what gold's doing, silver's going to do what it does. Regardless of stock market volatility, silver's going to do what it does. So this article takes a very different turn, right? Remember, we're talking about precious metals premiums and prices, and then they go into comparing some of the pros and cons, or the differences between precious metals and the stock market. So let's look at this, because I want to see the points they make. I can give you all my points, but let's look at their points. What are some of the qualities that differentiate owning precious metals from investing in the stock market? So here's their answer. As a tangible asset held in your possession, bullion has no counterparty risk. It can't go bankrupt or default. And that's kind of like I was saying, right, earlier, that 1 ounce coin, the value isn't the price tag attached to it. It's the 1 ounce inside of it. Everything else is based off of the price of who says that is worth what. No matter who says that 1 ounce coin is worth what is irrelevant, because the price, the value, is the 1 ounce of silver inside of it. Until you truly understand that, you'll never really understand silver's true value. You'll be missing the whole point. So, and this is this is a really good point. It can't go bankrupt or default. It doesn't commit fraud, and it doesn't make terrible decisions. It doesn't even rely on electricity or an internet connection to work. And ironically, silver is what makes an internet connection work, because silver is point blank the most highly conductive metal for thermal conductivity, electricity, and light sensitivity. Silver is used in everything electronic, everything. Private, portable, and enduring coins, rounds, and bars are a time-tested hedge against out-of-control central bankers, hostile politicians, ESG, malinvestment, other troubling developments currently cloud the outlook for most conventional assets. Gold and silver have been valuable for over 5,000 years, and it always will be. It is money. Money, fiat, is new. That's the newborn baby. Gold and silver have always been money. Now people say money is fiat and gold and silver isn't really money, but gold and silver has always been money. Our money was backed by gold and silver. It was gold. It was money before our money was even money. It's crazy how that happened. And when we got rid of the gold standard in 1971 and the silver standard, essentially a century earlier, almost to the dot, a century earlier, look at what happened to the dollar. In 1971, look at the dollar's strength. As soon as we got rid of the gold standard, the dollar tanked. So yeah, I mean, apart from that kind of took a left turn of what the point of the video is. Premiums aren't going down, but in my opinion, whether you're going to pay $25 for an ounce or $37 for an ounce, it really makes no difference in the grand scheme of things. Because one, you're talking about fake money into real money. As long as you're putting fake money into real money, then you're set. Because whether you're paying 25 or 37, that $12 is irrelevant. Yes, you could maybe get a little more silver, but at the end of the day, at least you have silver and no more dollars. And two, we're talking about triple, quadruple digit silver. So if you're worried that paying $37 is pricey, quote unquote, or And that's a good question. What is too high? When are you going to throw in the towel? If silver's $50, are you going to throw in the towel and say, nah, I'm not paying that anymore. That's too pricey. When silver hits $100, are you going to throw in the towel and say, $100 is too pricey? Do you think $100 is pricey for an ounce of silver? Because if you want to look at it, realistically, $100 bill or a 1 ounce silver coin. Let's say a $100 bill in your left hand, a 1 ounce silver coin in your right hand. What has more value? The 1 ounce silver coin. Because a $100 bill, what it will be worth in 5-10 years, will have drastically gone downwards, which you can buy with it. That 1 ounce silver coin holds its value. If you want a prime example, I'll say this and then I'll head off the video, but a Walking Liberty $half could get you a gallon of gas back in the day. That same exact Walking Liberty $half can get you a gallon of gas today. Back in the day, it was the 50 cents face value. There's 50 cents of silver inside of a Walking Liberty $half. So you would hand that Walking Liberty $half to your store clerk because gas was 50 cents back then. Then you could go into a time vault and time travel to today. That same coin still in your pocket could get you a gallon of gas. 50 cents can't get you a gallon of gas. But you could take that Walking Liberty $half, walk to your local coin shop, sell it for $20 and get yourself a couple gallons of gas. See how, since silver has value inside of it, that still allows you to purchase things today? If that Walking Liberty $half back in the day didn't have silver inside of it, you would be screwed now. But silver is value within itself, intrinsical value. And that is why moving forwards, think of that situation back in the day. From moving forwards, when you put your money in silver, that same principle is going to apply. So anyways, yeah, I'm going to wrap this video up here. Hope you enjoyed this video. Hope I got my point across. And I'd love to hear what you have to think or say. Make sure you subscribe. If you want to purchase some of that shiny stuff, I recommend Miles Franklin. Send an email to info@milesfranklin.com. Let them know Silver Slayer sent you. Great company. One of the only few authorized dealers that works with the U.S. Mint. Andy Schechtman is the CEO. You probably saw him on my channel or on Wall Street Silver or on the Rich Dad Radio Show. He's everywhere. He's one of the top dogs in the industry, and it could be very beneficial buying through him and building a business relationship with him compared to some random online dealer. So yeah, I'm going to wrap this video up here. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.